Hey, good afternoon, traders. This is Trader Tim coming to you from EminiMind, doing another Monday market analysis video. And for those that have been around for a while, you know that the biggest up days come in the context of a downtrend. And surprise, surprise, we had a pretty big turnaround today after being down quite a bit intraday. So today I want to go over a handful of intraday ES trades and talk about some other trades that I made and the bigger picture as well. So let's start. I've got the weekly ES chart up in front of us. You can see the lows from the 2020 sell-off at the start of the pandemic, and then here we are with today's candle, huge range day in the ES, over 200 points. So when we get in these situations where the market is pulling back, um, I don't like to panic, first of all, but I also don't like to just rush into kind of frantically day trading. So the start of the year, I tend to start slowly, in part because as we start a new year, we end up having some sort of a change or shift in trend. And so obviously the start of this year being a pretty strong change in trend, moving to the downside, it's just another helpful way and a good reason to ease into the year. So, had a couple of intraday ES trades I want to talk about, but before we do that, I think it was Thursday's video. I went over my SPY put hedge, and probably could have bought a little bit more time on those. I ended up closing the position out at the end of last week. So, I mean, it was a monster, probably one of my biggest put hedges to date. And then it turned around, took those profits, and I did a decent buy in the VUG long position today. And this is one of the instances where I'm okay breaking my rule of only managing a position at the end of the day. When we have these monster intraday, relatively big sell-offs intraday relative to what we've seen, the Dow's down 1,000 and the mainstream media is going berserk, that's a great opportunity to pick up stocks at a bargain. So is the bottom in? Probably not. But am I okay? Buying when the market is down considerably. Here is the 10% using that VUG example here. 10% line and then 20% off of highs. So intraday, I think my price was like 266. Um, Something around there, 266.10 maybe. So basically pretty close to the 20% off of highs, and to me that's quite a bargain. This fund has a lot of Tesla in it, and look at where Tesla came back to. Long term uptrend line here in Tesla. So also another good opportunity today to pick up some Tesla, and we're talking a longer term, or even in today's case, just catching a short swing for a week. Great opportunity to do that when you pull back to the uptrend line. You can go back to the buying the dip video I did conveniently a couple weeks ago in kind of preparation for this kind of a scenario, and there's some good nuggets in there as well. I also talked about not to really toot my own horn here, but in the live trading sessions that we've been doing, probably towards the end of last year, maybe 6 weeks or so ago, talking about how cash is not all bad. If you turn to the stock market for an inflationary hedge, the stock market can go down, and so it doesn't guarantee you the ability to outpace inflation just by putting all your money in the stock market. So yes, if you kept your money in cash for a long term, your buying power is going to diminish, but taking some money off the table, cashing in, taking some profits. I bought another house last year. Physical, real assets make for great hedges against inflation, and so sitting on a big pile of cash is a great thing to do when the market is going really strong because it sets you up for an opportunity to put that money to work when you get a bigger sell-off like this. So I added to my VUG position intraday. I did buy a little bit of Bitcoin as well. I sold most of it at about 58. The, well, I should say I sold a chunk on the first run up, and then at last year, and then the remaining I sold about 58, 59,000, and then like I said, we bought that house, and so seeing the market come down to this 35,000 area, that's where I put the buy in. Um, in 5 years, could Bitcoin be at 150? Sure. And so now I'm looking at, okay, 35, multiplied into, being worth 150 in 2, 3 years or even 5 years. That's a long-term bet I'm willing to sit on. If it goes to zero at this point, the money that that I pulled out of Bitcoin is, thousands of percent off of the original investment. So I'm fine putting a little bit more in here and kind of forgetting about it for the long term. I don't do a ton of like intraday or swing trading on the cryptocurrencies. It's mostly just the kind of buying when everyone's panic selling, and then when it's going berserk, you can cash in and go buy stuff. So, all right, let's talk about intraday ES. So, if you're newer to trading, and by newer, I mean even in the last 10 years, if you've started trading in the last 10 years, or at least since the pandemic, you've not experienced anything except a strong bull market. And it's very easy to get shaken out when your only experience is being able to, buy Tesla when it dips and make money as it goes up. So, as I said at the open, the biggest up days come in the context of a downtrend. And so that's a very important thing to note when we have these big down swings, to be prepared for some monster up days. Now, if you look at the daily chart on the ES, you do not have a prior daily high taken out. If we exclude the MLK day here, this was the day that I put on the SPY put hedge at the close, that little spinning top candle. But then every day since, the high for the day is lower than the prior day. And so um, that's a very kind of continuation bearish in this case sign. If we look over here, every day in the move up, the low for the day was higher than the prior day's low. And so looking for those sort of patterns when you're going screaming up or screaming down can be a helpful way to kind of determine when we're easing off, or sort of the trajectory of, let's say in the case of the move up, straight up becomes, starts to lose a little bit of steam. We break the low of the high bar here, and then we start to go a little bit more sideways. We break a swing low here, down right here, and then all of a sudden, okay, we can start looking for a trade in the other direction, in this case, the short side. So taking that information and looking at today's high, if we break today's high, then we could, look for the market to make our way up to possibly the full halfway back short here, about 4,500. So also, a big round number. If we take a quick look at the gaps, the unfilled gap that was way back here on the 13th of October was filled today, so we can get rid of that. And we do have a lot of unfilled gaps below us. So, you know, is this a bottom? Probably not in the long term, but in the short term, we've got a Fed meeting starting tomorrow. That announcement will be on Wednesday, and we should have quite a bit more clarity on what their next move will be coming on Wednesday. So be careful. Be careful on Wednesday. Could be a super volatile day. Let's go intraday. Talk about some setups from today. There are actually quite a few opportunities. And look at the breadth right now, -1 to 1 and -427 on the AD line. At the open, we were like -14 to 1, and we got down to -20 to 1. The AD line was -2500. When you see those kind of numbers at the open, it's sell every bounce. You know, you do not want to be buying um, at that open. Um, in the case of the longer term scenario, it's essentially just that, a longer term play. And so waiting for you almost have to wait for the moment where you say, gosh, is the world going to end? I mean, if you've been doing this long enough, you tend to not have those thoughts, but you kind of look for, CNBC and some of the media headlines to just be complete gut-wrenching doom and gloom, and there's your bottom for the day. I mean, by and large, that's uh, generally what ends up happening on these monster intraday reversals. But if we go back to the open for today and just run through a couple of these trades really quickly. The first, let me get I closed my log here. Let me pull it back up. So 3 short trades today. First one was 20 minutes after the bell, 50. And this one was just a breakdown into new lows. So here was the low prior to that. We opened, we moved down. I saw this guy and saw that trade, and we traded down in the second one here, and I ended up taking the third one. Just trying to be a little bit patient, but any of those would have been fine to take as far as shorts go. Let me clean up, get rid of all these drawings. We'll add them back to the chart. So basically just taking the short, we broke into lows. We had a low tick, and then you immediately break new lows. Look at all of the extreme low ticks on the day. If you tried buying today, all of these low ticks, you just blow through every single day, every single bounce. So extremely bearish breadth advanced decline line. Basically, you can just look at shorting all day long, or at least all morning session. So took the 43.0550 short. That one dropped pretty quickly. I did my best to trail each candle down here. I think I ended up getting out at a 94, just by trailing my stop down as best I could. I mean, these candles were forming in seconds, almost multiple candles at a time. And then the next one there wasn't really any news at the top of the hour, so I ended up taking another short at 7:59, which it was this guy here, and this was a let's see, we broke the opposing, which in this case was a long. So I drew up the long like this. See how the anchor point, the high, is above the 50%. We came down, we broke the 61.8, and then the low anchor point that I'm attached to is below the 61.8. It kind of straddles the 50 and 61.8 of this long. You can see it over here. Here's the long attached to these two opposing candles. And so I just drew up a short once we broke through that 61.8. This one didn't really get much momentum, but I was at least able to get a first target and then trail my stop. The first one went for like 10 points. That one was 3 points, and then the last one actually was the one I liked the best, and it ended up taking me out. And so if I mark the bottom of the first 30-minute range, sorry if I'm going a little bit fast, you can always back up or rewatch if you want. So here's the bottom of the first 30-minute range, and if I scroll over, it was 805, and that was, is that right? 810, that is not the bottom of the first 30-minute range. Hang on here. Here is the bottom of the first 30-minute range. Okay, And so 805, this guy lined up right with the underside of the first 30-minute range, and it went through the 16-8 too much, and I got stopped out before we rolled over. So, and then even like this next one didn't quite make it up into its 50%, so wasn't able to catch that next leg down. But one big takeaway is that when you have these big monster sell-off days, it is very difficult to get in and stay in unless you can get in on like the 15-minute breakout or breakdown and we trend super clean. But those are kind of the diamond in the rough, super rare. A lot more times what you have is like if I draw a halfway back short here, you're going to see that we went through the 61.8 and getting more, getting people to think that the market is bottoming and getting those buy orders to come in and then get them all stopped out and then every time we just keep going lower. I mean, that really is what accelerates the move lower. You have big institutional selling and pit traders and people having to scramble and just dump orders that have people have gotten long, and all of a sudden your stop orders are just getting blown through. You kind of need that little bounce in order to fake some people out to get the next 2, 3 legs lower. So I typically don't get in these big down days short and stay in for most of the day. A lot of the times you just have, some bigger winners in the mix, and then you get those opportunities for a longer term buy to add to a long-term position or even just initiating a swing. Like I said on Tesla, and again, I know I'm moving kind of fast, but as far as getting in Tesla on a swing, just buying some at the uptrend line here, or even buying above or buying at the close on the hammer or something like that, and then riding it up back to the 1,000 level or something. You can use these bigger kind of panic sell-off days as a good way to just get some stuff at a discount. And so I hope that's helpful and shed some light on kind of my thought process here. I've been doing this a long time, and made quite a bit of money coming out of the COVID pandemic sell-off, the 2008 sell-off. I mean, going back to the early 2000s, history does repeat itself. And if the market and the world does completely collapse, we've got a lot bigger problems than just your portfolio going to zero. So you can kind of factor in that the stock market's probably not going to go to zero. And if it does, then we're going to be looking for, you know, necessities rather than just trying to pad our pocketbook. So it's not always just about money, but I'm pretty sure that's why most of you are coming here for some thoughts and words of advice. So hope that's helpful. If you have questions, drop them in the comments below. I hope everyone has a great week of trading. Stay safe out there. Watch for that Fed meeting Wednesday, that announcement, and I will talk to you all soon.